Welcome to Study Time, a televised home learning program produced by Rwanda Basic Education Board.
Dear learners, how are you? I'm Anton, your economic teacher. Nice to meet you, and let me hope you are doing well over there. Today, we are going to continue with Unit 11, and that's the topic, that's production, and our lesson will be lesson 6, that's capital accumulation. And our learning objective, by the end of the lesson, you should be able to explain, determinants of capital accumulation. That's our learning objective. If we achieve it, then we shall say that it has been a good lesson, right? But before I continue, let's review our previous work. Let's look at what we covered briefly. What lesson do we look at last time? Good. So we looked at role of capital in production process. So we looked at some of the roles. Could you tell me some of them? Good. There is special, it promotes specialization. Capital promotes specialization. That's good. So if it promotes specialization, what do we expect? Good. We expect quality products. If we expect quality products, even in the long run, we shall get quantity. Good. Then, about services, we expect to get skilled workers because they are doing the same thing. What else? Good. There is promotion, technological promotion. It is capital promotes technological promotion. What else you look at? Good. So there is employment creation where there is capital because there is investment. As we invest, people get jobs. What else? Industrialization. Good. That's right. So those are some the roles that we looked at. Promote specialization in the process, in the production process, produces quality products, reduces dependence, facilitates resource renewal, and others. Good. And I'm happy for that. Let's see. You remember what we looked at. Now, back to our lesson. Capital accumulation. So if you hear of capital accumulation, what comes into your mind? Capital accumulation. You already know capital. Then accumulation, it's from the word accumulate. So how is capital, how does it accumulate? Which means that the capital is increasing. So that's what we are going to look at. So who can define it for us? Capital accumulation. Good. The process of increasing a country's stock of assets over a given period of time. Right. So here we are going to see. Let's take an example, our country, Rwanda. How does the way how capital increases? You hear that now the net investment of Rwanda has increased. All the gross capital accumulation has increased. So that is what we call capital accumulation. If it reduces, then It is dangerous. So we expect it to increase. How is it in our daily life? You start a business, let me say with 1 million. Then if the following year you add the total and you find that you have 2 million, it means that your capital has increased, it has accumulated. So we are going to look at the determinants of capital accumulation. Whenever you are in a business and you see that your capital is not increasing, then you know that you are operating in a loss. So whenever assets increase, your monetary, liquid capital increases, then human capital increases, then that is capital accumulation. So you can look on the screen and note down, get a pen and a paper and note down that capital accumulation refers to the process of increasing a country's stock of capital assets over a given period of time. So under capital accumulation, it can be either gross capital accumulation or net capital accumulation. So we have gross capital accumulation, and net. Do we have net capital accumulation? Now, under gross capital accumulation, you will see that it is the total profits on capital assets. So if you get that here, profits, you get the total of the profits on assets. So the profits you get, that's all under capital accumulation. For instance, as I told you, that you start a business with 1 million. Then the following year, you find that you have 2 millions. What does it mean? It means that 1 million plus what you already have, that is, the profit you've got 1 million plus already the million you have, the existing capital, that's what we call gross capital accumulation. Then net capital accumulation. So for it, it is the addition of capital or expenditure on new assets. Whenever you buy new assets, that's what we call net capital accumulation. I want you to get me right. Gross capital accumulation, that's the total profits on capital assets. Then here it is the addition to the existing volume of capital. Right, but if we talk of capital accumulation, that's the process of increasing a country's stock of capital assets over a given period of time. So you expect your teacher may tell you to define the meaning of capital accumulation. Then the difference between gross capital accumulation and net capital accumulation. You will note that. Good. Now, let's look at the determinants. Determinants determinants of capital accumulation. Determinants of capital accumulation. So what things that determine capital, a country's capital to increase? Here, we shall look at both sides. We shall see when does capital increase and when does it become low. The determinant will show we shall show when it is increasing and when it is low. Right, so 1, the level, as I told you, get a pen and paper or an exercise book, not a paper. So the level of income, in an economy. The level of income in an economy. So if we talk of income, we mean how much a country receives, gets from the investments, or as a person, how much do you earn from what you invested in. So the level of income in an economy. Now let's see, when income increases and the other factors remain constant, the level of investment also increases. So if increase in investment, that's automatically capital accumulation also does what? Increases. Get me right. When income increases, also investment will increase. If it increases, then we shall have more capital accumulation. Then on the other hand, low level of income. Low level of what? Income. So when we are getting little income, we are getting less. We are getting even, we have no jobs, we are earning nothing. And the income is low. What does it mean? It means that we shall have low savings. And you have low savings, it means even there will be no investment, or we shall have low investment. Thus, low capital accumulation. Let me hope you are getting this point right. When income increases, investment and saving will also increase. As investment and income increase and saving increase, we shall be able to increase our capital accumulation. But when we have low income, poor savings, and low investment, we shall have low capital accumulation. That's how you argue with that point when you are answering this question. Then, so whenever you give both sides to show when is it low, when is capital accumulation is low, and when it is high. Good. 2. Political climate. Political climate in the country. Political climate in the country. Now, we have a situation in a country where you find there is law and order, when security is okay, when there are no wars instabilities. So when the country is secure, people's property are protected. So when they are protected, it means that even there is stable, the business is stable, we can reinvest. Then when there is instabilities, when there is no law and order, that's where you find when people's properties are stolen. So as properties are stolen, then the capital assets will automatically reduce, and we shall have no actual capital accumulation. Now, take also a scenario in a village where you say now we have built, let me say, a hall. After building a hall, you put there chairs, everything. So the following day you find when chairs are taken, office equipments, computers are taken. So whenever properties are taken, there is no way how capital will accumulate. Let me think you get the point. When there is law and order, we expect business to move on and properties will be okay. At the end, we shall have high capital accumulation. Good. Next, high levels of capital outflow. High levels of capital inflow. Capital inflows. So high level of capital inflow leads to capital accumulation. So whenever you see capital inflow, there is investment. People are reinvesting. Then you know that we shall have high capital accumulation. Then on the other hand, if there is capital outflow, investors are selling assets or they are allocating assets to another country where there is all security or where there is good conditions. So whenever there is capital outflow, capital accumulation will be low. Get the point? Let me repeat. When there is capital inflow, it means even there is reinvestment. So whenever there is reinvestment, capital accumulation increases. But if there is capital outflow, no investment, entrepreneurs are allocating business in other areas, we shall have low capital accumulation. Good. Next, we have the level of development, the level of development, the level of development of financial institutions, the level of development of financial institutions. Now, if we have well-developed institutions, financial institutions, they will encourage saving. As they encourage saving, we shall have investment. Thus, increasing capital accumulation. But if we have less developed financial institutions, we shall have no savings because they will not encourage savings. At the end of the day, we shall have low capital accumulation. Right. Next, we have population structure, population structure in terms of, so population structure in terms of growth rate and age. Now, look here. Take a situation where we have the population is high, we have many people, but most of them, when they are dependents, they have no money. When it's the government giving the basic needs, the government is offering them food, feeding, accommodation, medical, everything, they depend on the government. What does it mean? It means we shall have low capital accumulation. But in a situation where we have few people, but working, when they are earning something, that one, it will lead to good savings. If we happen to get good savings, we shall be able to investment. As investment, we expect high capital accumulation. Let me hope you've got the point right. When the population is having dependents, so many dependents, like the children, the vulnerable, people who don't work, we shall have no savings and we shall have no investment. Good. Next, the size of the market. The size of the market. So how does this determinant, how does it lead to either low capital accumulation or high? How? Good. When we have, let's say, a well-organized and expanding market, it encourages production of goods and services. So if we have production of goods and services, what does it mean? It will generate more incomes. If we get more incomes, we shall be able to save. As we save, we are also able to invest. That one increases capital accumulation. Then, when the market is small, we have a small market. We have no market. Production will be low. Means we shall have low incomes. If we have low incomes, low investment. Hence, less capital accumulation. Right. Next, we have government. We have government policies. Government policies. Government policies on savings and investment. Now, if the government is encouraging people to save, please save. Here in Rwanda, Ejo Heza, they have those programs. They are encouraging people to do what? To save. So if they save, the following day, they will be able to invest. As they invest, we shall have capital accumulation. But if the government does not encourage savings and investment, then we shall have low capital accumulation. Next, the level of entrepreneurship. The level of entrepreneurship. So this is also a determinant. You all know who is an entrepreneur. So good entrepreneurial skills. If we have people with skills, what does it mean? They will be able to provide quality and quantity. So if we get products of quality and quantity, we are able to get a good market. If we get good market, we shall receive income, then we shall be able to invest. As we invest, we shall have capital accumulation will increase. But if we have poor entrepreneurial skills, we shall have poor quality products, low quantity, then we shall have no savings, and we shall not invest. At the end of that day, we shall end up when we have low capital accumulation. Dear learners, now look here. I want you, let's look here. We said that at the end of the lesson, we shall be able to define capital accumulation and give the determinants. So these are some of the determinants. Level of income, political climate in the country, high level of capital inflow, the level of development of financial institution, population structure, the size of the market, government policy, the level of entrepreneurship. So all these, you see, they determine capital accumulation. Let me hope we have achieved it. We have achieved our objective. Now, I'm going to give you an assignment, then you will do it. Take it, you can look on the screen, then you take that homework. Explain the meaning of capital accumulation and the factors that influence the level of capital accumulation. Note it down. You can note down that question. Thank you very much. Stay safe. And bonga na. Thanks. Bye-bye.